Okay, good evening and welcome back everyone to our Nordic live market analysis session. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay. And today we're going to do another session where we look at the markets together, look at what's currently happening in the equity markets from a macro perspective, look at some economic indicators, what our views are with respect to the directional view of equities, fixed income, the different sectors, as well as individual ideas that we have here for the broader markets. But before we get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So today what we're going to do is start off by taking a look at just the overall options education agenda, because today we're going to discuss a few options strategies that we're going to look at when we look at the ideas. So if you want to review these options strategies and you want to learn more about them, whether it's a first-time options investor or if you're an experienced investor and you're trying to brush up on your technique or your best practices, we'll show you how to access it. Then we'll take a look at the full Nordic markets. We'll take a look at all four major equity markets in the Nordics. Take a look at, from a charting perspective, where they currently sit and what our views are. We'll also take a look at fixed income, specifically interest rates, and how that has influenced the equity markets and what our views are going forward. We'll take a look at some of the economic indicators that are, I think, relevant to understanding the shape of the recovery and the speed of the recovery that we're expecting, and then share with you some of our ideas in the individual markets, and specifically some option strategies that you can use for the type of idea so that you can get a sense for how to apply options to a specific idea that you might have in the broader markets. And then we'll open this up for Q&A here at the very end. So before I get started, just a quick reminder. Today, we're going to talk about a few different options strategies. So we have these beginner, intermediate, and advanced courses that you can take at any time. These are free and on demand for anyone who wants to access them, whether you're a beginner and you're trying to brush up on the basics, or if you want to learn more about the strategies, like some of the debit and credit spreads that we'll talk about here today, or for those of you that are willing to get into the more advanced stuff, volatility, Greeks, technical analysis, that type of stuff. It's all available using this link here, which I just posted into the chat window. And for those of you that are watching the recording of this, you can simply go to trade.optionsplay.com/NordicEDU to access these beginner, intermediate, and advanced courses on options trading. But the primary question that I want to help investors answer from today's session is, are the equity markets in the later stages of a bullish rally, and are we at risk of a pullback? I think a lot of investors have been asking us this question, I would say pretty much for the last 3 to 4 months, where there's concerns around where the markets are and whether or not we're going to see a bit of a pullback here. So before I actually jump into the session, I just want to poll the audience and get a sense for how many of you believe that we're due for a pullback here in the equity markets. Type yes if you believe we're due for a pullback, and type no if you think equity markets are just going to keep moving on higher. Yes if you think you're going to see a pullback, no if you think markets are just going to keep moving higher. Looks like there's quite a few yeses, but actually more no's than yeses. So more of you watching the session here today believe that equity markets are heading higher, and some of you believe that markets are going to pull back here. So my name is Tony Zhang. I'm the chief strategist here at OptionsPlay, and I want to share with you my technical research that helps inform my decisions as to which one of those two beliefs I have in the current markets and how I look at underlying data to help me make my decisions. So let's first take a look at the OMX S30, which is the Swedish index. As you can see on the weekly chart, very strong uptrend. There is no doubt about the trend of the market. It is very much straight and up to the right. And if we look at the index itself, we haven't seen a lot of progress here over the past week and a half here or so, but it is starting to continue to push higher here to the upside. We've seen similar periods of rest before we've seen this this continuation higher here. So just to go back a little bit, we really had about almost a 3-month resting period, if you will, after what is a very strong move here from about 1920 to about 2200 or so. And usually after long periods of of strong rallies, you tend to have long periods of rest. And then what we're currently in is an extension of that resting period or consolidation period, and we're very much in the midst of a continuation higher. So just on that alone, from a technical perspective, this is very much still in a very bullish market currently. When we look at the technicals, there are a few concerning factors here. The fact that we've made a higher high in price on the weekly chart, but we have failed to make a higher high on the momentum side. That certainly leads us to believe that on the short run, we're going to see perhaps a bit of a shallow pullback. But this type of pullback usually is not a very, doesn't have to be a very big pullback, especially if you're trading in a channel. This pullback tends to get you back toward the bottom end of the channel and simply gives you a better risk to reward for long positions. Because when you're near the top end of a channel, many times you'll find that the entry point here is not particularly attractive. You want to wait for pullbacks here and then look for that long opportunity here in the broader markets, but very much in that bullish uptrend. Short-term timing, not particularly strong. Looking for a bit of a pullback here would certainly be a better long opportunity, because even within a strong uptrend, you tend to have small pullbacks, and those small pullbacks are your opportunities to get better entry points, if you will, with strong risk to reward ratios. And especially if you're patient and you wait for a pullback here, the one thing about entering down here is that if the market starts to drop below these trend lines, you can cut your losses with a relatively small loss, versus if you enter the markets here, you have to wait all the way until the markets have declined here before you can say, my bullish thesis was wrong, let me cut my losses and move on. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. Perfect. Okay, so that's how we're looking at this at the Swedish markets, which very strong, taking a bit of a pause here over the past couple of days, but very much in a strong uptrend. When we look at the Danish markets have had a period of rest here again. So the Danish markets have been very much on a strong uptrend. You've had small pullbacks here within that uptrend. And right now we are pretty much at the end of a bullish rally here. So if you want to connect the dots here, you also see, what we see similar to in the Swedish markets here. Something like this, a bit of a channel that the index is trading in. It's near the top end of the channel here. This is a pretty small channel here, but very much recently breaking out from this 1920 level is a very bullish outlook here. You have similar type of concerns here, but as you can see on the Danish markets, a higher high in price was actually confirmed by a higher high in momentum. Momentum also made a higher high on multiple timeframes, as you can see. As the markets move higher, momentum has moved higher. The one thing that I want to warn investors is that we are very much overbought, right? The thing is that things can stay overbought for quite some time, and that is totally okay. But on the short-term time frame, you do see a little bit of negative divergence here. Higher highs in price no longer being confirmed by higher highs in momentum. But again, these types of things will resolve themselves in fairly small movements here to the downside. So maybe in that 1900 level here would be a more optimal entry point for long positions, but very much strong uptrend here. It is pretty late in the strong uptrend, right? So it's pretty much been straight up from about 1550 or so, 1530 or so up to 1950. So this is a pretty sizable move that we're already in. Especially if you consider the fact that we've had a consolidation for a period of time, and now we've had a very extended move here to the upside. So I do think that we're starting to get to some levels that are going to be tough for the markets to continue moving significantly higher from before they kind of have more of a consolidation period. Because after long moves like this, big moves like this, you need to have periods of rest in order for them to continue moving higher. You simply cannot have markets that just keep moving higher and higher and higher without resting, similar to this period, right? So you've had a big move and then you had a period of rest, and this period of rest was fairly sizable here. I would say that you kind of have this period of rest that was, this started back here in November and lasted all the way through, early April before it continued moving higher here. And then since April, we've had a pretty sizable move here to the upside. So a little bit late into the rally here from Copenhagen. If you look at Helsinki in a very, very just straight and orderly uptrend. Now, I will say what's interesting about Helsinki is that it recently broke out above this trend line. This is the channel that the index has been trading in for quite some time. Very orderly channel, I would say. And recently we broke out above that channel. That's a pretty bullish move here for this particular index. And what's interesting here is that you have no negative divergence. Higher highs in price confirmed by momentum. So this is one of the strongest equity markets that I currently see here out of the Nordic markets. And it's not overbought yet. So meaning we have some more upside in terms of momentum. So short term, this is one that can continue to move quite a bit higher here. But as it continues to move higher here, again, we're fairly overbought here. This is something that you do want to be careful of in terms of pushing new positions. So this is really where you want to think about, how do you establish long positions in this type of market? Are you already long and you're thinking about what to do with those longs, or are you, seeking new long positions? If you're seeking new long positions at all-time highs, you want to make sure you think about protection. You want to think about, what if the markets start to roll over? What if it starts to break below some support lines and pulls back to this 150-day moving average? Because right now, these indices are trading pretty far away from their moving averages. So if you do see a correction, you could see a fairly sizable correction here to the downside. So how do you protect yourself if these indices do correct back to its moving average, like we saw here back in November, right? And these events happen. Whenever we get a little too far away from the moving average, we tend to have checkbacks to the moving average. So these are some of the things that we want to pay attention to. We're pretty far away from the 21-week moving average. We're pretty far away from the 150-day moving average. So these are some of the things that we do want to pay attention to. And we'll talk a little bit about the option strategies that we might use for these types of market conditions. And lastly, looking at OSLO. OSLO is definitely the weakest of the markets. And one of the things that we really pointed out, that I think is worth mentioning here is you can see higher highs in price, lower highs in momentum. That led to a sizable sell-off, but sell-off that just got us to the bottom of the channel, right? So as we talk about channels and the stock and the markets trading in a channel, when you see this type of negative divergence, you tend to see them resolve themselves by moving back towards the bottom of the channel. And right now we're sort of in the middle of this channel, starting to turn back up here again, but there's a lot of congestion here, if you will, meaning it has to get back above this 1010 level here. And if it breaks out above that level, then it certainly is an interesting bullish move here for this particular market. But as you can see, the Oslo market kind of trades in a range for a period of time, breaks out, trades in a range, breaks out, and maybe trades in another range. It's not, it doesn't do big moves per se. And, I would say obviously Oslo is a bit tied to oil pricing. We've seen crude pricing come down a little bit, and that's part of the weakness that I think we're starting to see here in the Norwegian markets. The Norwegian markets obviously shifting quite a bit of their wealth and future, if you will, into the future renewable energies and different types of technologies. So that is kind of the shift, but that's a shift that's going to take multiple years for that to happen. It doesn't happen overnight. There's still a lot of exposure in the Norwegian markets to oil and gas. So this is the one that I think is probably the least bullish here because of their high exposure to oil and gas, and energy is just not performing as well, especially since oil prices have largely capped out here at the current price around, let's take a look at crude. Crude, as you can see, is back down to 68 or so. If you look at a long-term chart here for crude, you do have this high here around 75 or so that we reached and kind of bounced higher here. And then you have about the 65 level that has been, a high prior to the pandemic that we reached recently. It's coming back towards that $65 level here. So those are some of the levels that we're paying attention to here in oil. If oil gets down to 65 and starts to bounce higher here, and if it gets back above 75, then I would certainly think Helsinki would be far stronger. But inside of the 65, 75 level here, I think you're going to see a less slower momentum here for Oslo versus the other major markets. So that's how I'm currently viewing the broader markets. As you can see, quite a few of them are very bullish. Swedish, Copenhagen, and Helsinki very strong. Oslo a little bit on the weaker side and very much in a bullish market. And I would say quite a bit of it is due to the recent declines, a significant decline that we've seen in interest rates. So the Swedish 10-year bonds have been somewhere between, equilibrium around 40 basis points or so. But in June, we started to fall significantly. We're back down to just 7 basis points. That shifts equity valuations quite a bit. That's what causes equities to continue to expand multiples here. The question is whether we get back below zero or not. That is a concern that we start to see. Likely we'll get back towards zero and maybe find a bit of equilibrium around zero and we don't go negative. And then hopefully we start to see interest rates rise again. But, as we start to see interest rates consolidate, that is also what we can potentially coincide with a market top. And then as we see interest rates rise, that is likely what's going to cause, perhaps a bit of a pullback here in the equity market. So this is one indicator that I think is important to pay attention to, is the 10-year bond for the Swedish markets. And if for those of you in other countries, if you want to look at your country's interest rates with respect to your equity valuations, that certainly is suitable. But the majority of trading is done on the Swedish markets. That's why we're looking at the Swedish interest rates here. So pulling, changing speeds a little bit here to the economics. So, we just finished July. We saw some of the July numbers here. Swedish business confidence continues to grow, which is really strong here from a corporate earnings perspective. As business confidence continues to expand, that's really where we see businesses invest in capital expenditure in terms of growing their business. That is great in terms of the economic recovery. But we continue to see this retail sales number. Last month really surprised to the upside, 2.5% growth in terms of retail sales. But July came out a much weaker again than expected, about flat basically in terms of growth on retail sales. And that has to do something with such a strong month here in June, such a weak month here in July. And generally speaking, the seasonal factors are something that we also have to take into account here. July and August tend to be slower in terms of retail sales in the Nordics. But, there's clearly a bit of a divergence here between what consumers are feeling versus what businesses are feeling in terms of confidence. I will say that Swedish business confidence is certainly something that we want to pay attention to. And as long as this continues to climb or remain fairly elevated, that is going to be strong for the economic recovery and, speaks to the corporate profits, because at the end of the day, when you think about the companies that you are investing in or trading in, you are investing in their future profits. And if a company is bullish on their potential to capture those profits, that is going to be beneficial for those equity pricing and equity valuations. So economically speaking, things still look fairly strong here. If we look at the services PMI, and this is another thing that's important, is the fact that services is expanding. Manufacturing is coming down a little bit. It's still fairly high here, which is good. We're still seeing growth here in terms of manufacturing. That's strong. It is starting to weaken a little bit here from April, but that's okay. We're expecting that as we get into the second half, things are going to slow down a little bit in terms of growth. We would ideally still like to see growth, even if that growth is a slow amount of growth. We're starting to see a little bit of contraction here. That's something that we want to monitor. But the important part is that services continue to grow, because this is really the part of the economy that needs to get back on its feet. Think about restaurants and bars and those types of businesses that largely have been impacted the most by the pandemic. You want to make sure that services continues to grow. That's going to show you that the economic recovery is in place. So far in July, we saw another a growth in terms of services PMI. That is also constructive. So when you look at the economic front, things are still all pointing in the right direction. There's nothing yet in the data that shows that things are slowing down in terms of the recovery, that things are not moving in the right direction. So far, things look pretty good. But these are the things that we're going to keep an eye out for and make sure that you are updated on this type of data. So when we look at the sector rotation, this is really where we look at individual sectors and see which sectors are leading, which sectors are lagging, and what shifts we are starting to see here from the sectors. So first of all, we only have three sectors that are leading here at the moment. You have industrials, you have technology, and you have healthcare. Technology and industrials moving towards the leading category and continuing to gather both momentum and relative strength. You have consumer goods that is starting to get into the weakening category and starting to lose some relative strength and momentum here. You have telecom, and you have quite a few sectors that are lagging behind, but you do have utilities, you have energy, and you have basic materials that are starting to improve. You're starting to see some improvement here, while telecom, consumer services, and financials continue to decline. So what's good about this chart here is that you see a fair amount of rotation, right? You have sectors that are moving lower, you have sectors that are moving higher, you have sectors that are, improving, you have sectors that are lagging behind. This type of rotation is good. You want to see rotation here. That is healthy for a market rally. The one thing I will point out is that if you look at the US markets, there's a lack of rotation right now from US markets, but the European markets so far, we're still seeing a fair amount of rotation. So the health of the market rally, in my opinion, in Europe is actually stronger than the health of the market rally that we're seeing here in the US. So as you're looking for opportunities here in this market, it's important to understand which sectors are leading, which sectors are lagging behind, to think about which ones you want to position within individual names. So with that, let's take a look at some of the opportunities here in the markets here right now. And for that, I'm going to pull up OptionsPlay, and I want to share with you some of the thoughts that I have just in terms of what we're seeing here in the broader markets and how you can think about, positioning for it, utilizing options or utilizing the stock itself. So let's start off with Sandvik. I was looking at this earlier. And, this is a stock that has really been consolidating a bit, if you will, over the past a couple of months, really consolidating. And the question really for this stock is, which way does it break out? This is a stock that's been consolidating for quite some time here. And the question is, does it break out here to the upside or does it break out here to the downside? And this is one that, in the meantime, you can play more of a neutral play here to wait for a potential breakout here. But, this is a stock that, we think could potentially break out here to the upside. And you can disagree. You can use this platform in different ways. So if you think that you agree, you can use a bullish strategy here like we are, or you can say, no, I'm bearish on the stock. I think this is headed back towards this 215, 210 low. And then you can look at some bear strategies. This platform is really designed so that regardless of your views, you can quickly click on a symbol and a direction, and you'll be able to see different strategies side by side. In this particular case, I'm taking more of a bullish view here to revisit that 237, 240 high here to the upside. So maybe if I'm looking at a call spread, that is one of the ways that I can take a bullish position while limiting my losses. Because if I had to buy 100 shares, I would need to spend 22,000 crowns to control the same 100 shares using the call spread. I only have to spend 1,105 crowns. So I'm risking a fraction, about 5% of the stock's value when I trade a vertical spread like this versus buying the stock over here. And this is important because what if I buy the strategy and the stock declines back down to 210? And that's really where our P&L simulator is really useful, because I can simulate what happens if the stock declines to 210. And I always encourage investors, before you look at how much money you can make, you should always first look at how much money can I lose. And you must first be comfortable with that before you proceed with looking at how much money you can make. Does that make sense? Please type 2 into the chat window if that makes sense to you. Because if you're not comfortable with the risk, you should simply not even bother looking at how much money you can make. Always make sure that you're comfortable with the risk on each strategy before you look at how much money you can make. So here, if I'm wrong and the stock declines back towards the bottom end of the range, back to 210, if I bought 100 shares of the stock, I would risk 1,500 crowns. If I bought the call spread, I would risk 1,100 crowns. So my first goal is to reduce risk, right? So if I'm wrong, I want to risk 1,100 crowns versus 1,500 crowns. That's part of the reason why I think using an option strategy when the markets are trading near all-time highs is a strategy that you should consider, especially when volatilities are low. It's relatively inexpensive to buy these call options or buy options in general. And that's going to provide some potential higher returns if you are correct. Now, what happens if the stock returns back to 237, 238, which is the all-time high? Actually, the all-time highs are 242, right? So let's take a look at 242. What happens if it gets up to 242? So if I bought the stock, I'm looking at about a 7% return. If I bought the call option, I'm looking at about a 99% return because I only have to put up 5% of the capital to get into the trade. And that that reduction in capital amplifies my return from 7% to 99%. So this is really where I want to look in terms of using options to understand how much leverage am I getting? And it is 99% return suitable for the risk that I'm taking. Maybe you might say that that's not enough, that you really need the stock to make a bigger move before this starts to get really interesting. And this is how investors decide. For some investors, 99% is not enough to risk. It's not enough to risk $1,100 to make $1,100. And if that's the case, you might simply say, well, I'm just going to buy 100 shares of the stock. And there's nothing wrong from saying that I don't think that the option strategy is the best strategy for me. This platform is not designed to tell you to trade options. It's designed to make sure that you're making the right decisions for your money. This is your money that you're risking. You must make sure you understand what the potential risks are, what the potential rewards are, and then make a decision, an educated decision as to which one is best for you. And sometimes that best decision is to not trade the option. Sometimes the best decision is to simply buy the stock. And by seeing strategies side by side, you can make that decision a little bit easier and makes it clear to you as to which one's best suited for you. Does that make sense? Please type 3 into the chat window if that makes sense to you. Perfect. Okay, so let's just take a look at another example here. I was looking at STOR. And so now this is a stock that is just on the verge of looking like it might break out higher here. So it's trading at around 173 or so, rallied, declined all the way down to about 145 or so and managed to rally all the way back up. And I think this is the type of stock. And so it's got decent relative strength. It's got bullish trends that could start to break out here to the upside, but I haven't seen the breakout yet. So this is one that you have to be careful. Do you want to enter the trade now hoping that it breaks out, or do you wait for the breakout before you enter this particular trade? So let's just say, for argument's sake, and this is not necessarily, I think, the best timing on the trade because the stock has already had a pretty big run here to the upside over the past couple of months. Usually I like to see a bit of a pullback here before I look for that opportunity, especially if we zoom in here, right? If you think about this channel, we're trading near the top end of that channel. I would really like to see a bit more of a pullback here before I look for that long opportunity. But this is one that I do think is, if it does break out from this level here, this 170 level here or so, you have a lot more upside. So this is one that I think is worth paying attention to here as well. And if I use a vertical spread just like this, what's very interesting is how much lower in terms of risk that I have with the call spread than I do with the stock itself, right? Because 565 crowns versus 17,000 140 crowns is only 3.2%. I'm only risking 3.2% at risk in total to buy the call spread versus buying the stock. That, in my opinion, is very, very interesting because if I'm wrong and the stock returns back to the 146, 147 level, as you can see here, if I bought 100 shares of the stock, I'm looking at 2,500 crowns worth of risk versus here, I'm only risking 565. So I'm actually risking about 20%, a little bit more than 20% of the risk that I take from buying the call spread versus buying the stock. This for me is a lot more interesting than the previous example, right? And hopefully these numbers show you just, how much different some different strategies will provide you, or different options on different stocks will provide you. So then now let's think a little bit about, how far this stock can go. And, you really can project out, this stock makes big moves from 145 to 170 or so, right? That's the range the stock is largely trading in. If it projects out to that, you're really looking well into the 190s. So even conservatively, if you look at 185 or let's just call 185, here you're looking at about an 8% return versus 165% return. Now, this is, I would say, it's not every day that you're going to find these types of magnifications of returns while reducing your risk so much. But here's a good example of one that does, provide what looks like a fairly attractive risk to reward using options rather than the stock itself. Does everyone see the difference between the previous example and this one? Please type 4 into the chat window if that makes sense to you. It's a pretty big difference between the previous one, right? Where the risk to reward was similar to the stock. Here, it's so different from the stock. And these are the types of opportunities that you want to try to seek in the markets. So lastly, what I'll do is I will show you one more example. And this is more of a, this just to show the range, if you will, right? So far, we've looked at 2 bullish positions. Why don't we take a look at a bearish one? So some of you that are concerned about a pullback here, I do want to show you perhaps some bearish opportunities. So looking at a stock like Volvo, right? And this is the industrial stock, right? Volvo. This is not the car company. As you can see, it starts to look like what some investors would call a head and shoulders pattern that's starting to form here. So this would generally tend to, show you more of a bearish view here on the underlying stock. But another thing that you can draw here is, this is a stock that has been in a strong uptrend for quite some time. As you can see, it's tested this support level multiple times, but recently broke this level, came back to retest this level as resistance, and so far is being rejected off that level. So just to zoom in a little, just so you can see that chart, we've broken below it, came back to retest it, and is now starting to move lower. So for me, there are multiple signals here that show me that this is a stock that maybe is starting to form a top and is maybe starting to start moving a little bit lower. Now, this is really where it depends on, perhaps you might also have a fundamental view on the stock as to whether you think this is going to be a quick and swift move here to the downside, or this is going to be more of a slow grind here to the downside. This is a stock that tends to grind. This is not a stock that moves a whole lot. So, this is really where you can perhaps take a look at selling some premium, looking at selling a call credit spread. I was looking at selling the 215, 220 call spread earlier. As you can see here, I'm collecting 525 crowns versus buying a put option. And these are different strategies that you can take. You can compare them side by side and see which one's best suited for you. As you can see, this one has a 64% probability of profit. This has a 41% probability of profit. And what you exchange for that is the risk to reward, right? The risk to reward on this strategy is much better because you risk 685 to make 1315, but you have a lower probability of profit. Here, you risk more, you risk 975 to potentially make 25, but your probability of profit is much, much higher. So that's the inverse relationship that you have with probability of profit and risk to reward. So you can either have high probability of profit with low risk to reward, or you can have low risk, probability of profit with high risk to reward. And a lot of times I get questions from investors asking me which one is better. And the answer is that one is not better than the other. It just depends on where you think the stock is going to go. Because if you think the stock is going to be more of a slow grind here, right? You think the stock maybe a month later is going to be at maybe 198 or something. As you can see here, if the stock moves a little bit lower down to like 198, which is around here, well, here you're going to be able to make 525 crowns versus here you only make 15 crowns, right? And you can see that the risk on these two are not too different from each other. One risk about 1,000, one risk about 700 crowns. So you can always say, what happens if this trade doesn't go in my favor? Well, the reality here is that if the trade really goes against you, you're going to risk a little bit more on the credit spread than you do on the debit spread. But if, let's say, the stock moves a little bit higher, right? Let's say it moves up to 205 or 206. What's great about this strategy is that you still make a profit, even though you've got the directional view wrong, versus here you lose a full 685. That's a pretty big difference, right? If the stock doesn't move, here you lose 590, here you make 525. So that's a pretty big difference between the two. But the other big difference is if the stock does make a big move to the downside, right? So if the stock gets back down into, let's say, the 185s or so, as you can see here, around 185, here you're making 1,300 crowns in profits versus here you're only making 500 crowns in profit. So you're making more than double the potential amount of profit on the debit spread as you do on the credit spread. So, you really have to ask yourself, how far do I think the stock's going to go? Do I think it's going to move a little bit? If that's the case, you probably want to sell the credit spread. If you think the stock's going to make a big move, that's when you might think you want to buy the debit spread. Does that make sense? Please type 5 into the chat window if that makes sense to you. Perfect. Okay. So, and if any of the strategies that I discussed here today, you're not familiar with and you want to learn more, that's really where the link that I sent you earlier, the OptionsPlay Nordic EDU options education session is going to be able to help you better understand these strategies. We have best practices. We show you how to use this platform so that to analyze these trades. And hopefully today shows you applications of it using real symbols so that you can get an understanding as to how a strategist like myself goes about determining what is the optimal strategy based on where I think the stock is going to go. So with that covers what I wanted to share with you here today. For those of you that are joining us for the first time, if you don't have access to the platform, you can sign up for free at optionsplay.se. This is available to everyone free of charge. You'll get access to the OptionsPlay platform. You'll get access to our weekly options education webinars, all of the education videos, as well as our weekly scans that we send out to our customers, cover calls and short put scans that you can use to find income generating opportunities here in the broader market. So that's available to you for free at optionsplay.se. So with that covers what I wanted to share with you here today. What I'll do at this point is I'll open this up for Q&A. I'll try to answer as many questions as I have time for today so that we can try to answer your questions before I sign off. So there is a chat window and there's a Q&A section at the bottom of your screen. If you could please bring up your Q&A window, you can submit your questions there and I'll try to answer as many questions as I have time for here. Tommy's asking, is business confidence, sector rotation, et cetera, available through OptionsPlay? So no, those are two data points that is not available through OptionsPlay. The business confidence numbers is something that everyone can access through a website called tradingeconomics.com. I'll post a link there. You can search for Sweden in that particular website. These are, economic numbers for the most part are free. You don't have to pay anyone to get it. The sector rotation is not available. Sector rotation is actually proprietary to a specific company that I pay for in order to access. So that is currently not available to everyone, but you can access it through a company called stockcharts.com. For those of you that are interested, if you are interested in paying for it, you can access it through a company called stockcharts.com. Can you please explain the OptionsPlay score? Sure. So as I was telling you before, there's three numbers that are really important for every strategy: your risk to reward and your probability of profit. And like I said, the relationship is that if you have a high probability of profit, you're going to have a poor risk to reward. If you have a low probability of profit, you're going to have a high risk to reward. And the question for many investors is to see, how well balanced are these numbers to each other? And that's why we created the options play score, to give you a better sense for where the balance is. Where do you have some edge if the stock was to make a big move? And that's really why we created the options play scores, to give you a better sense for when you look at these risk rewards, when you look at those probabilities, which one is weighted in your favor. And that's how we created the options play score. You know, the inspiration comes from poker players, because poker players make the same type of calculations in their head to decide, is this a hand they want to play or is this a hand they want to fold? They want to know what the probability of success is, and they want to know what the risk reward is for them if they do place that bet. And they only want to place bets where they have some form of an edge. So that's why we created the options play score, to give you a sense for what the risk reward is, what the probability is, and whether or not there's any type of edge in your favor. Any other questions? Options play is great for analyzing, but how to find interesting stocks. So we have a trade ideas section, right? The trade ideas section actually looks at technical factors as well as the overall trend of the stock, right? So for example, if you click on any stock, you know, we'll find stocks that have a bullish trend and have generated some kind of buy signal using a technical indicator. So you can use this to help you look for interesting stocks that are moving. You know, we have bullish and bearish scans so that you can look for bullish stocks, bearish stocks, and we find stocks that are currently trending in a specific direction to give you a better sense for opportunities here in the broader markets. So you can use options play not only for analysis, but also to scan for ideas using the trade ideas section. That's updated every single day. Do you have this kind of webinar for US markets? Yes. So, you know, if you go to optionsplay.com, we have a whole set of services similar to this for US markets. And you can sign up for a free trial at optionsplay.com, which I will post into the link here on the chat window. Any other questions? If there are no other questions, I just want to, again, thank everyone for taking the time out here this evening. I know this is the summer vacation time for a lot of people in the Nordics. So I really appreciate you taking the time out here from your time off to listen to us. And I hope that this was helpful in giving you a better understanding of the markets, the strategies to trade the markets, and how to use options play to analyze these opportunities. Looks like one new question for index. Yeah, you can type in all of the indices that I talked about here today, OMX S30. All of the indices are available here as well. So you can trade the indices as well in addition to underlying stocks. And you can just search for it in the search box. So OMX C25. As you can see, Copenhagen is here, Helsinki is here. All of them are available here. Okay, with that, thank you so much. We'll send out the recording to you as soon as we finish here today. Thank you so much for your time, and I'll see you guys here in 2 weeks' time on our next options education session. Thank you so much and have a great evening.